car crash cases, defective products, dangerous drugs, injuries, and abuse. Across the state of Alabama, the attorneys, proudly sponsored by Hollis Wright & Couch, are here to serve you. Your tough legal questions answered by our experts. The attorneys with Josh Wright from the Hollis Wright & Couch Law Firm and host David Lamb.
Hello and welcome into The Attorneys. Appreciate you spending your Sunday evening with us. For the next half hour, we're going to talk about a topic, taxes. The tax man, he does come. What can you do and what are your rights? That's our topic of conversation. If you'd like to join in, you can call, text, email. That information will be displayed on the screen throughout the evening. And leading our conversation, as he often does, Josh Wright of the firm Hollis Wright & Couch. Good to see you, sir.
You too. Talk about a relevant topic. A lot of folks getting ready to file their taxes right now. This is a perfect time to do this show. And, you know, with 70,000 pages out there in the tax code, you need to get yourself with people that know what they're doing, and that's exactly what we're going to do tonight. Brad Howell with the Palmer, Meadows Howell firm here in Birmingham is an expert in this area, so we brought him on to answer questions from what are the percentages of those that get audited to how do you prevent an audit to what do you do if you are audited. I mean, you name it, we're going to be able to talk about those topics tonight. So, Brad, thank you so much for being on.
Not a problem.
Today.
It's a pleasure being here.
Start us out with just a little background about your practice and how you kind of come into this practice as an expert in this area.
Sure. Primarily what we do is tax debt resolution. Essentially when an individual or a business entity has accrued tax debt and needs to resolve that to get it on an installment agreement or an offer in compromise or some other plan where they can reasonably pay that off over an amount of time, we assist with doing that. We also assist taxpayers with kind of upfront planning to ensure that they're basically abiding by all the tax laws and that they're avoiding any unnecessary taxes by choosing the correct business entity, by paying quarterly estimated taxes, avoiding penalties, things of that nature.
So let's start it out where I think folks would want to know what percentage of consumers, individuals out there are getting audited per year?
Well, overall, it's a very small number, and this number takes into account both individual returns as well as corporate or LLC returns, and that is around 1.5% of all filed returns. Now, obviously, there are some things that may trigger an audit that could increase your chances of being audited, but if you're just talking about the general numbers, around 1.5% are audited each year. What
are the things that can trigger an audit or make it more likely that you could be audited?
Well, there are a variety of things, and in all honesty, that can change from year to year. The IRS will look at specific entities or specific types of businesses sometimes with a little more scrutiny. More recently, we've seen a lot of nonprofits being audited more than usual because they suspect that there's abuse in the system. But just as far as your average taxpayer or your average business, a lot of times if you itemize deductions and you're claiming a large amount of deductions, especially to the point that you're claiming a loss for that year, that can raise the chances of being audited. And especially if you're operating a business and for the past 3 years in a row you've claimed a loss, that can indicate to the IRS that it's not a business that should be claiming a lot of deductions that they are, but rather a hobby. So those are some of the main things that we see coming up that increase the chances of audit for an individual.
Now, if you're audited, is there jail time as a potential? I mean, is that something, if you get caught for doing something or not reporting something, is jail time guaranteed, or are there generally just civil penalties? How does that work?
In general, the IRS and the Department of Revenue just wants their money. In most instances, there are not going to be criminal charges brought, and there's a specific reason for that. That is that the IRS has to prove, or the Department of Revenue has to prove, that there was an intent to evade taxes. So merely failing to file a tax return doesn't actually equate to an intent to not pay taxes. Similarly, if you owe an amount that, even if it's a significant amount that's owed, even if you did file your returns, it's still not necessarily intent to evade taxes. Now, that's a question we see a lot because you've got a lot of high-profile celebrities, people like Willie Nelson and Pete Rose, Darryl Strawberry, things of that nature, that you see them in the headlines, and that's kind of a deterrent by the IRS to get the news out there to make people aware that these criminal charges are possible, but in most instances they don't apply.
You even hear that term with the stars, they could face jail time. Does that basically mean if they don't pay up, they could go to jail, basically?
Right, and you see in a lot of instances, for example, Willie Nelson had a album that he produced and raised enough proceeds to pay the taxes off. Yes. So in that instance, he avoided jail time, even though there was a possible sentence for that.
A question that we've got here, will the IRS, will they take my house, car, or other property?
They have the legal ability to do so, but the question is, will they do it? Generally speaking, you're going to get notices from the IRS or Department of Revenue saying this is what you owe, please pay us by this date. If you continue to ignore those notices, or maybe they're going to a wrong address and you've never seen them, eventually your file, the assessment, will get sent to collections. And at that point in time, if they can't get in contact with you, they will proceed with those type of collections actions. Generally, we see wage garnishments and bank levies as the first actions they take, with seizure of real property and personal property being something as a more of a last resort.
I've heard that oftentimes if somebody has moved, the first notice that they get that there is a past due amount or an arrearage related to their taxes is there's a garnishment at their place of employment. Is that something you see?
Right, that's a common problem, and usually how that occurs is if an individual has not filed taxes in a while, the IRS and the Department of Revenue, they go by the last address they had on file for your return. So if last time you filed, let's say it was 2006, you moved in 2007, they're going to be sending notifications to that old address.
What is the trigger for the Department of Revenue to know that this individual is supposed to file a tax return? I mean, is it the fact that they filed tax returns for the last 20 years? I mean, if you filed tax returns for 20 years and then 3 years in a row you just decide, I'm not going to file tax returns right now, what triggers hey, this person needs to be paying taxes? I mean, is there some check on the system? Is it based on Social Security numbers? I mean, how does that work?
Usually what occurs is anytime an individual earns wages, there'll be a wage earning statement either in the form of 1099, W-2, or similar form that is reported to the state and federal governments, so they're aware that you have income. Gotcha. If they notice that the amount of income is such that it's likely that you would have owed taxes, then they're probably going to initiate an audit. Now, let's say for 2004 is the first time you received wage earning statements, and for previous years you didn't receive anything. They may still open up an audit for those years just to see what it is that you earned and to make sure that you don't owe anything.
How far does an audit go back? That's a question that I get quite a bit. How far will the audit itself go back if the IRS wants to come in and audit you?
I would definitely say at least for 6 years. The IRS has a general rule of thumb where they won't go back any further than 6 years, just based because statute of limitations for many criminal charges is 6 years. But anytime you're dealing with specific financial documentations like relating to an asset that you own, you definitely want to keep that for the life of the asset. And in instances where maybe you trade in that asset like a vehicle for a new vehicle, that may basically factor into the basis you have in that new vehicle, and so you'll want to keep documentation of both assets at that point in time.
A question we've got here, should I be paying quarterly estimated taxes?
It ultimately depends upon what type of income you're receiving. If you are, for instance, an independent contractor who's receiving a 1099, obviously wages aren't being, or taxes, excuse me, aren't being withheld from your wages. So you're receiving a gross amount and you need to be paying that in on a quarterly basis. Even if you're a W-2 employee, if you have other sources of income that may be a 1099, you may need to pay quarterly estimated taxes. And the general rule of thumb there is that if you anticipate you're going to owe at least $1,000 in federal taxes as an individual, or $500 as a corporation in federal taxes, then you have to file quarterly estimated taxes. And for the state, that threshold is $500 for both individuals and businesses.
Guy knows his stuff. That's why we bring experts on the show right here. He's well above you and me, buddy. Trust me.
I'm trying to keep up. A couple of more segments remaining. Would love to hear from you. Call, text, email, get those questions in. You can also find the firm Hollis Wright & Couch on Facebook and Twitter. The taxman's coming. You better be ready. We're arming you with information when the attorneys come. Right back. Welcome back into the attorneys, talking about taxes and knowing your rights, helping us understand that. We appreciate you being with us. You can call, text, email. That information clearly displayed throughout the program. Waits for you to be a part of this conversation. Talking with Brad Howell of the firm Palmer, Meadows & Howell. Brad, if, say, a tax bill, the debt is $10,000, what is the likelihood of settling for less than that full amount?
Well, there are a variety of ways that you can reduce the total debt that's owed. Generally speaking, though, when you hear the term settling the debt, you often think of, well, if I owe $20,000, can I pay them $10,000 and have this just completely wiped clear? Right. The answer to that is it depends. Essentially, what we have to do is we have to look at the financial situation of the taxpayer and determine whether or not they have the means to pay this entire assessment over the collectible lifespan of this debt. Okay. And essentially, we assist the taxpayers with preparing Form 433A, which is something that the IRS uses, or the C41E, which is what the department uses, essentially a collection information statement that details what their monthly income is, what their monthly expenses are, what their equity is and assets, to try to determine if they can settle this debt. Now, obviously not everyone qualifies for that, but there are other means such as penalty abatement, as well as if you have a situation where a spouse is not liable for a debt, but they filed a joint return, had no knowledge of it, you may be able to get innocent spouse relief where you're completely cleared of having any liability for that debt as an individual.
What about bankruptcy? I have heard that if somebody files bankruptcy because of a tax debt they have, the tax debt is not wiped out through the bankruptcy. Is that accurate, or am I incorrect?
It would depend upon the type of tax debt. Now, a lot of sales tax, withholding for employees, those are considered trust fund taxes that the business had a responsibility to immediately turn over, and those cannot be discharged in bankruptcy. But for income taxes, those can be discharged. Even if they're not able to be discharged, you can set them up in a payment plan in the bankruptcy proceedings so that you're paying it off over time. But if you want to completely discharge the debt, there's some general rules you have to be aware of. You have to make sure that the debt was, the return was filed, or the due date for the return was filed at least 3 years ago, that the return was actually filed at least 2 years ago, and that the assessment that was entered was at least more than 240 days ago by the IRS department.
If somebody's feeling overwhelmed right now watching this show that they have a tax debt that they owe, what do you recommend they do? Do they contact guys like you and let y'all evaluate their circumstance?
Well, I think the first thing they obviously need to do is take a deep breath. Anytime a federal or state agency comes after you, there's a little bit of tension and apprehension there. But just realize that everything is fixable no matter what stage you're at, and definitely need to contact some sort of professional, whether it be an accountant or attorney, to kind of guide you through the process, because as with any government agency, there are lots of regulations, lots of rules, and it can sometimes be a maze to try to navigate. So having a professional there to assist you with that is definitely a benefit to the taxpayer.
Now, does it cost the taxpayer money to come talk with you guys initially? How does that process work generally?
All of our initial consultations are free, because we would, first of all, like the individual to come in and meet with us, get to know us in person, because there are a lot of national companies out there that claim to be able to reduce debts or to settle debts for you, and they're not really always in the best interest of the taxpayer. We've seen a lot of them that have had class action lawsuits filed against them. They've gone through bankruptcies, had criminal charges brought against them. So you want to make sure you're dealing with someone who you know and be able to help them out, and that's what we want to do. In addition, there are some times where it's a very basic problem that possibly the taxpayer could fix by themselves. So there's not really a need to involve an attorney or accountant. In those instances, we do like to give general advice to help out the taxpayer. But then there are some instances in which we would definitely advise a professional to get involved.
Yeah, do you guys have accountants that work with you or kind of alongside you to work through this issue, or do the lawyers handle most of that stuff?
We handle, of course, all the negotiation process, any filings of appeals and things of that nature. If a taxpayer does need an accountant, we've worked with several throughout the state that we can refer them to, and a lot of them are sort of specialized or have focused on filing past due tax returns, doing forensic accounting, and a lot of the stuff that we would need in order to get these tax debts resolved.
Take a deep breath. That's the one thing I learned from this show. That's a good thing. That's a good thing.
And he said it so, sometimes whenever the IRS comes after you, you get tense, you think?
Yeah.
Yeah, I think so. That message will get your attention. A question here from a viewer. I disagree with the amount that the government claims I owe. What can I do?
Good question.
Yeah, a lot of times, people will get the paperwork from these agencies, and it says you owe this amount, and they think, well, how did they calculate that, and what can I do? It ultimately depends upon where they're at in the assessment and the collections process. Obviously, the earlier you respond to these notices and the earlier you get information or documentation to them, the more easily things are going to go, the more efficient the process is going to be, and you have a higher chance of getting it resolved earlier on. Even if you're later on in the process, right before they begin collections, they'll send out a final notice. The IRS sends out a final notice of intent to levy, and the department sends out a final notice before seizure. That will give you either with the state 10 days and with the IRS 30 days to respond, and you have a chance to appeal at that point as well. So all along the way, there's usually some means of resolution where you can challenge the debt that you owe.
And, I mean, they can make a mistake.
Oh, definitely. I mean, you see a lot of times where the assessment has been entered because the taxpayer didn't get the documentation to the auditor, right. Or the taxpayer is just not very knowledgeable about tax laws and doesn't know what to get to the auditor. So in that type of instance, the auditor or examiner has to enter in an assessment based upon the information they have. Right. And when they don't have enough information or documentation, it does end up being inaccurate most of the time.
Mm-hmm. Another reason to come talk to guys like this, just to make sure that you're on top of it and you know that you're paying what you're supposed to. I have heard, don't know this to be fact, but I've heard that a vast majority of all personal income tax returns are paid out by the state and federal government within a 3-week period is from the time they're filed. Is that accurate or is that inaccurate?
Yeah, usually the IRS will get it done within 21 days, and that's regardless of whether it was an electronic filing or a paper filing. Now, this year may be a little bit of an issue because with the new tax regulations that they've passed for 2013, there is some delay in certain types of returns that are being filed, so you may see a delay in that regard. And the State Department of Revenue, they obviously have fewer resources than the IRS to get these returns out, so it may take a little bit longer with the State Department of Revenue. And usually they're working on ways to get those refunds back to individuals quicker. One thing that they've recently implemented is basically kind of a debit card that you can get that they will send you that has your refund on it. And they're indicating that will be a little bit quicker, especially than mailing out the checks. It'll be basically like an electronic transfer.
One thing I want to talk about after the break, big ticket items of changes in the code this year that may slow the process down a little bit, but that could be advantageous for consumers.
Good. After the break, we'll pick it up right there. We'll step aside, second break, coming up the final segment of the attorneys in our conversation on taxes. Here's how you can join us. Call, text, email. Find the firm of Hollis, Wright & Couch if you search that term on Facebook, and on Twitter it's Hollis_Wright. Stay tuned. We're coming right back.